I'm starting a business from scratch and sharing the whole journey with you so you can see how an accountant would set up a business for success. Today's topic is all about basic business structuring. Hello everyone, my name is Rooshock and today I'm talking about business structures, and this is a part of my series Starting a Business from Scratch, where I'm starting a small little reselling business so I can use that example to teach you about basic business topics across accounting and small business for success. Now for business structuring, I'm going to go through some of the key factors that you need to understand so that you can make the correct decision on what business structure is right from you. And then at the end, I'm going to show the example of how I've gone through this decision-making process for this small business I'm starting. So I want to be able to use that to give you a real life example of how you'd actually step through all these key factors to make the right decision. So if you're unaware, we have a few basic structures here in Australia that most people are picking between a sole trader, a partnership, a trust, or a company. They're your main options. Now there's no one key factor that makes this decision because it needs to be applied on an individual basis. So you're going to weigh up these 4 different key factors I've got here today and then make that decision that's going to give you the best option when it comes to tax, when it comes to protection of your assets, and when it comes to complexity and what you can actually handle. There is also the cost factor. Some of these entities will cost more to set up and to maintain on an ongoing basis. So that's another factor that will go into making your decision on what structure is best for you. So the first key factor is expected profits. And this can be hard when you're starting out a business. But you want to have some idea of, well, how much money am I actually going to make off this business? Because depending on how much you expect to make will depend on which structure is right for you when it comes from a tax point of view. For instance, if you're going to make no money at all in the first few years and you're actually thinking maybe you're going to a loss position, or maybe a sole trader might suit you because you can potentially offset those losses against other income. Same as if you know you're going to make millions of dollars a year, you're probably going to be looking at company structure purely for the tax benefits just alone. The second key factor is, what risk factors does your business carry? So are you operating in an industry that's high risk? So for instance, are you operating maybe in a professional services industry where you know that there's the risk of being sued may be higher depending on what type of professional service you're doing? Or maybe you're just offering an online retail store where the risk is really low. You're going to want to weigh these up, and that is going to go into your decision making. So for instance, if you know you are operating in a really high risk industry, you're doing something that's quite innovative, but maybe it, is in the healthcare field, and you think, oh look, the chance of me getting sued could happen, even though I've got my insurances and stuff. Maybe you want to separate this business and put it into a company so there is a separate legal entity, and that might give you some asset protection on other assets that you own personally. Now this is more of a legal area, so go and speak to a lawyer about it, especially if you've got significant assets or you're in a significant risky area. If you're not in either of those, maybe you're just wanting some run-of-the-mill advice, have a chat to your accountant at a basic level. They might be able to give you some basic guidance, and normally if I'm dealing with a client that raises that, I might say, hey, look, what you're doing is potentially risky. I think you should chat to a lawyer about this because this could become one of the key factors and might jump some of those other key factors we're talking about in making this structuring decision. The third key factor is, who is involved in this business? Is it just you? Is it you and your partner? Are there multiple parties involved? Who else is involved in your family, etc.? Some of this will all go into this factor. So, if you're operating a business and it's you and your partner, and you're going to be operating things 50-50, well, a partnership might make sense. Maybe it's just yourself and it's just a small little thing. Well, then you might look down the fact of a sole trader. Or are you involving a friend, or is there multiple people that are all becoming business partners? Well, suddenly trusts or companies might become more attractive purely because they're going to give you that more security that, hey, if something goes wrong, we have a defined benefit of this business. This can also be really important when it comes to looking at tax minimalization. So understanding that is using a different structure potentially going to help you from a tax point of view, depending on who's involved or who's got the potential to benefit from this business. So this is a really key factor in understanding who is actually involved in the day-to-day running of the business and who do we want to distribute profits to. And then the fourth key factor I want to discuss is, what other income do you have? What other earnings have you got? What other assets have you got? What have you got outside of this business? So understanding, are you working a full-time job and this is just a side business? Or do you have multiple businesses across a range of different industries and you want to keep them all separate? By understanding this, you'll look at also your risk minimization as well as your tax minimization. So for instance, if you're earning a full-time employment income, you might be earning $90,000 or $100,000 a year, and you're going to start a little small business and it's going to earn 50 or 60 grand because you know it's going to be really successful. maybe you're going to go, hang on, do I really need those funds right now? Or should I use a company structure where the company will have a lower tax rate than I have personally, and therefore I can accumulate more money in the company while paying a lower rate of tax and building up those funds and reinvesting in the business because I don't really need these funds personally at the moment. So knowing your other income is really vital when you're making this business structure decision. And then the final key factor I want to discuss is the cost of setting up these entities. Will come into it if you're setting up a company or a trust. So if you know there's going to be initial upfront cost and there's going to be more ongoing costs, maybe you've got to get some legal advice, etc. That could factor into, well, is this actually going to be worth it if you're just looking at it from a tax point of view? Maybe those extra tax savings are going to be completely offset by the extra costs or the extra complexity of the running the actual structure. So that will be a key factor in your decision making. Now let's go through these 5 key factors for the business I'm setting up. So this small little reselling business. So first of all, you've heard me just say it's a small business. It's going to be run on the side of my existing business, obviously. And I'm definitely not expecting to even turn much profits, if any at all, because it's more so to set this business up to show you guys what I would do. So with that factor, I can know, okay, expected profits are going to be low. Now the risk factor is also very low. It's an online retail store. I'm not likely to even see customers in person. The chance of me getting sued is incredibly low. Therefore, I don't need to separate this out or do anything special when it comes to the risk minimization side of things. Now, who else is involved? There's no one else involved in the business. It's just me. I do obviously have a partner and now a child. So, from a tax point of view, is there any way that I could potentially utilize them? But in this case, I'm not. It's just going to be me. It's just going to be me involved. And because there's not going to be much profits, the whole splitting of profits wouldn't really come into my decision making. Now, other income, I obviously have an existing business. That is run through a company structure. I get paid a wage. And again, this stuff isn't going to be factored in too much for me because of the low profits. And because I'm just starting out. So for someone else starting a similar business, if you know that you're just starting out, that can also be a key factor because you're like, hey, look, I don't know how much this is going to earn. It's just something on the side. The risk is low. Do I really need a complex setup? So with all those things considered, I've decided to go with the sole trader setup. I already had an existing ABN, so I'm able to use that. Because it's just going to be a small business, I'm just doing that. If this thing was to grow and suddenly I was like, hey, I want to do more reselling and this is something I'm going to do on the weekends and aiming to earn $30,000, $40,000, $50,000 profits a year, maybe I would want to look at a different structure because it might start then pushing my personal taxable income up into higher levels. But for now, when you're just starting out with this type of business, a sole trader can be great, especially in my situation. Like I've said, your situation may be different. So go and chat to your accountant about it so they can give you some advice. Now, before you go about the rest of the day, make sure you go and check out the upcoming video I've done where I'm talking about how to set up a zero file from basics. And it's especially suited if you're a sole trader because that's the one I set up on that example. And also hit that subscribe button and I'll talk to you on the next video.